Hey guys, welcome to my channel. My name is Samir, where we talk about stocks. So let's dive right in and get right into seeing what Mr. Market brought us. Looking right away, we can see from the heat map for the S&P 500, we had a really green day, really solid day. Nothing really out of the ordinary. Everything performed very, very well. Same can be said about the Nasdaq 100. One thing to keep in mind is going forward, we do have Microsoft earnings end of this month as well as Amazon. So those are two things, two stocks, two companies that I definitely have on my radar. They both have been performing very, very well. They're both industry leaders in the cloud computing space. So I'm very excited to see what their earnings bring. And the Russell 2000 as a whole, the index has just been performing like a monster. So we know there's going to be rate hikes. Sorry about that. We know there's going to be rate cuts coming in, and I think the projection is going to be in September. Very, very high chance of that happening in September. So getting right into the S&P ETF, we can definitely see from all-time highs that we failed to make higher high off this pullback, and as a result, we set a lower high, and we violated this trend channel that we've been in for quite some time, about two months now, getting to be almost 3 months. We were in this trend channel, uh, and we popped out of it, which we've done prior. And excuse me, my charting is not the best. You want to have it touch as many data points as possible to make it consistent. With that said, you're going to see areas of deviation due to normal distribution. Um, and when it does come out of that area, similar to like a Bollinger Band, it will come back in, or a Keltner channel. So with that said, it was for most looking at this as data set evidence, we can see that price respected this trend channel that it was in. For the most part, it did a very good job of staying within this trend channel, the price action, until we got to this all-time high, around 564, 565, and then from there it kind of dipped out. And as we mentioned, it's done that in the past. Over here, we see sellers are in control by these candle bodies, as well as with this wick. You see that it's not really going in as much. If this printed a hammer, it may be given more confluence of a potential bounce. From there, we set a lower high, failed to get back in this channel, failed to set a higher high. Therefore, we had a change of character. As a result, we entered this new trend and are in a more of a bearish sentiment. It's not like perma bearish or markets are going to zero, but we're coming into this pullback, which I think it's a pullback, not so much a correction. Um, Filled this gap here, and that's kind of where we are. On the weekly time frame, let me just erase these real quick. On the weekly time frame, we can add a bit of confluence to this idea with some lines, some support and resistance levels, and see what price was doing at those levels. One area that's more of a one area that's kind of more of a zone is right here. We can see price for a few weeks definitely worked in to this area. So this was definitely some resistance at some point. It was here for about 3 weeks. Indecision on the second week. Came in, wicked up, and from there took off. Some catalyst probably, some news event, some kind. What I'm trying to get at is this used to be pretty heavy resistance because it was hard to breaking into it, right? As you can see here, these three impulse moves, there wasn't very much resistance. Price may wick into this area as now newfound potential support. Funny enough, that is a monthly support level, so we can potentially see price coming in on this monthly support level. I'm not saying today or tomorrow, but the rate at what doing right now when we go to the daily time frame. Um, we know we're kind of in this pullback zone, so it wouldn't surprise me if it came, especially since we're near the end of the month and potentially tested that monthly support level either end of this month or the start of next. So with the Nasdaq, we know the move is similar to the S&P 500 ETF to the SPY, and their indices, just because it's overall market sentiment. They don't have a divergence. Another thing as to why this move was a bit more volatile, the Nasdaq QQQ ETF has a different beta level than the S&P, um, but beyond that, tech was a bit overextended, so it made sense for there to be more of a sector rotation and money rotation out of big tech companies and into other sectors that um, weren't averaging what they usually average on an annual basis or quarterly basis. Um, I know a lot of money went into IWM, small caps sectors, just because of the potential rate cut happening in September. But I know that wasn't the only sector that was getting money funneled into it. With that said, going into this, there's a gnarly pullback. We came into basically testing this level, this zone here, which was the catalyst that kind of brought us into this massive impulse. And this could have been right around, oh, I don't know, maybe not really, because it usually happens on the 14th or 15th CPI, PPI data. So I'm not too sure what data it was that caused this massive impulse move, but there was definitely some catalyst after. Sometimes it doesn't always have to be a catalyst because there's a compression, prices in a range compression, uh, followed by range expansion, and you see that a few times. Um, Another instance where you might see that is right here. So you can see price is in a relatively tight compression between a $5 increment, 385 to 390, followed by, and usually some catalyst, positive sentiment in this instance, comes out, and we see range expansion, impulse, and then another impulse. So sorry for the tangent and sorry for that. I digress. As far as daily candle print, we definitely got some indecision going on. At some point during the day, this was a hammer candle, which I think was definitely a bull trap for people midday, who may have potentially thought we could see price move up a bit more, especially when you drill down into smaller time frames, and see a few candles that may look like a potential reversal are coming, especially near the end of the day. We get like these two hammers back to back. Um, but no, it looks like it's a bit more of a long-legged indecision type of doji going on. So again, the way I see it, I think of zones as areas of interest that have like gravitational pull. I know that's such a weird way to put it, but this is how I read price action, and we're already here. Like this area is such an important zone, uh, support and resistance level, and order block as well. Let's not forget about the big players. Um, so this is like an order block also for big institutions to come in at, and it's a nice round number. Look at that, 450, 455. It wouldn't surprise me if price dipped into this 450 and 455 area as another buying opportunity for money to rotate back into big tech companies. If you like the video, please definitely drop a comment, like, and potentially subscribe.